Welcome back to TaxAid and Cash Oregon's online video class on Oregon taxes. This is the third module of 4. Prior to this, you've already finished your work on federal taxes, and you've completed the modules on the Intro to Oregon Tax Law and the work on some Oregon-specific items. Today, we'll be talking about the workflow for Oregon tax preparation. We'll go over the steps taken to complete a return, and we'll talk about some items in the ASCE worksheet. We'll look at some examples of items with varying difficulty and how they're put into the software. First, when interviewing the client and reviewing the Form 13614, be sure to complete the ASCE worksheet on Oregon-specific items, and make any notes about things to come back to. Then, with just a few exceptions, like the special Oregon medical subtraction, you'll complete the entire federal return next within TaxSlayer. Remember that the federal AGI is a starting point for most of what's in the Oregon return. So then you'll review the federal return carefully and make sure that any information needed on the Oregon return is present. Now you're ready to complete the Oregon return. And when you're done, you can use the ASCE worksheet codes and compare those to the schedule Oregon ASC and make sure that everything is present that you'd expected. Finally, compile everything and hand it off to a QR for a second review. So let's take another look in more detail. Much of what you'll need to complete the Oregon return should flow from the federal return. So take care when you're looking at the Oregon ASCE worksheet for any information that you'll need to prepare in advance on the federal return. For example, if a taxpayer will qualify for the Working Family Household Dependent Care Credit, this information will come from the federal Form 2441. So you'll need to be sure you had that information to complete the Form 2441, even if the taxpayer doesn't intend to take the dependent care credit on the federal return. And if the taxpayer or spouse is 65 years or older, you'll need to take a little time separating out their medical expenses for the special Oregon medical subtraction. We'll talk about both of these later in the module. And if the taxpayer is not a full-year resident of Oregon, be sure you note the dates of residency and which income is Oregon sourced. You'll want to be sure you know what came from where before you do the federal return, since there won't be a distinction made on the 1040 about what income came from what state. Now you've completed the interview. Let's recall that some items require no additional work. These are the ones that TaxSlayer will do for you automatically. Things like the taxpayer's basic information, the subtraction of any taxable Social Security benefits at the federal level, bringing forward any Schedule A items for the itemization of deductions, as well as any federal tax liability. These should all happen automatically behind the scenes. Let's review how the Oregon return will look before any efforts required from the volunteer. Remember this diagram? Well, for some taxpayers who've lived in Oregon for the full year and have no items on the ORASC schedule, virtually the entire return could be put together for you from TaxSlayer. Remember, this looks complicated, but this flow is what the software is doing for you. Next, let's look at an example of one that requires some minor effort. We'll use the example of Oregon lottery winnings. At the federal level, all lottery winnings will be taxable. However, Oregon will let you subtract up to $600 of winnings per play from the Oregon lottery. And take a look at the rules around lottery winnings, and recall what we discussed in the last module about what we're classifying as minor effort. The amount of the winnings will be captured in the federal return, but the details, the specifics about whether it's per play or whether it's a single ticket that won over $600, it won't be available. So while you're filling out the ASCE worksheet, you'll want to have gotten that information to help you fill out the state return. And this way, you'll know whether any of the winnings are eligible for the state subtraction. In this example, let's say the taxpayer had $250 of lottery winnings against a single play. So on the ASCE worksheet, you'll make a note, 250 in the leftmost column. This way, when you return to the state return after finishing the federal, you'll have that information available. Now, we'll take a look at what minor effort means within the TaxSlayer software. In the subtraction section, you'll see the special Oregon medical subtraction and the federal pension income subtraction, and below that, a section just labeled Other Subtraction. You'll use this Other Subtraction to record the subtraction for lottery winnings, as well as almost every other subtraction that requires minor effort. From here, you'll select Oregon lottery winnings from the drop-down menu, and then type in the $250 that the taxpayer had attested and that you noted during the interview process, and then just hit Save. For most other Oregon subtractions, you'll complete them in the same way. Subtractions, Other Subtraction, and then just choose the name of the subtraction from the drop-down menu. Also remember, on the ASCE worksheet, there's a sentence or two on each one to guide you through the process. Next, we'll talk about some items that require a little more work. Some of it's even outside of the TaxSlayer software. First, we'll be talking about the special Oregon medical subtraction. The special Oregon medical subtraction is designed to help people of retirement age with their medical expenses. The process for this is a little bit different from the way that medical expenses are handled on the federal return, and at the time of this recording, it's not entirely built into TaxSlayer's algorithm. So we use a calculator developed and posted at the Eugene TA website. That's eugeneta.org. And here's how it'll work. If the taxpayer or the taxpayer's spouse is born before December 31st, 1953, some or all of their medical expenses might be a subtraction against Oregon income. This may be different from how it's handled at the federal level based on whether there's itemization and whether the medical expenses exceed the 7.5% floor on the Schedule A. This process is currently our best practice to work through the special Oregon medical subtraction. We'll use the calculator at eugeneta.org and follow the instructions carefully. Any special steps needed should be documented on the eugeneta.org website. Next, you'll make a list of the taxpayer's medical expenses and use that data to complete the federal return. And this part is important. Be sure to note whose expense is whose. And this way, you'll have a more complete picture of whether they're itemizing, you'll know their medical expenses that they're deducting on their federal return, and you'll have a complete list to use in the calculator to help you with the state return. Then, it's recommended that you create a PDF of both the federal and the Oregon tax forms. This way, you'll have the info handy to fill in the calculator. Once the calculator is completed, you'll have the information you need to finish the state return. Now, this feels like a lot of information. That's because it is. But even though very little of this process is done automatically, don't worry. You have plenty of resources to help you through it. So let's take a look at the calculator. First, enter the taxpayers' names and all the medical expenses broken out by type, which will eventually go to the federal Schedule A. And again, be sure you've noted which expenses belong to the taxpayer, which to the spouse, and which belong to any other medical dependents. Then, After clicking the blue button at the bottom, the rightmost column should total with the correct medical expenses to enter into the Federal Schedule A. It can be helpful to print this page out when entering the federal return, or just make a note. Then, return to TaxSlayer and complete the federal return as usual, using the information you generated from the calculator. And it's not strictly necessary, but it is a good idea to create a PDF of both returns. This way you'll have the information from the forms rather than from the input screens. Then, return to the calculator and input the information from the federal return and click on this button to calculate the Special Oregon Medical Subtraction. Now, you'll have the information you need to fill out the Special Oregon Medical Subtraction section of the state return. Since the calculator takes into effect whether or not the taxpayer is itemizing at the federal level, the steps have to be done in this order to get the right info. Next, we'll take a look at another subtraction that's also a little bit more complex. The federal pension income exclusion is available for taxpayers who spent time in federal employment prior to October of 1991. The exclusion is a percentage based on the amount of time they worked before that date. So if the exclusion's previously been taken, they should have that percentage available, and that will help you determine the subtraction. If there is no record of it, you can use another calculator at eugeneta.org to help you determine the correct percentage. As long as the taxpayer recalls their start and end date with their federal employment, we can simply put those dates into the calculator. Then, enter the amount of taxable federal pension income from the federal return and press the Calculate button. The calculator should tell you how many months were worked prior to that date and the percentage this time compared to the total months worked. And this will give you two important pieces of information. You'll have the subtraction amount usable on this year's Oregon return, and by printing out the calculator, you'll also be able to provide that percentage to the taxpayer. When they return the following year, they'll be able to give that information directly to the volunteer and save them from having to use the calculator again. So let's take a look at that. Since the taxpayer is retired, then the amount of time they worked prior to October 1991 is the same every year. So even if they don't have the calculator printed out, if they have their previous year's return, we'll be able to make that determination by taking the subtraction taken on the previous year's return, that's code 307, and divide that by the taxable federal pension received. Whether they have the percentage of income to subtract or a previous year's return, you should be able to get the percentage of income to subtract without having to redo the calculator. In this example, taxpayer Jason subtracted 82.7% of his federal pension income on the state return. So even though the exact amount of the pension will change from year to year, the percentage of time worked prior to October 1991 will stay exactly the same. We'll take a look at one last example of a more complex subtraction on the Oregon return. We've mentioned the Working Family Household and Dependent Care Refundable Credit in a previous module. This is a lucrative credit, and it helps working families pay for care for their dependents while they're working. The eligibility criteria for this credit are similar but not exactly the same as the Form 2441 on the federal return. The taxpayer must qualify on income. They must be looking for work, be working, attending school, or be disabled. And the qualifying individual must be a dependent or a disabled spouse. And if they're a dependent, they must be either disabled or a child under 13. The expenses themselves are most often daycare while the taxpayer is working, but it could also be household services needed for the care of the qualifying individual. The expenses must be paid by the taxpayer, but as of 2018, they can't have been paid for with pre-tax dollars. And some expenses aren't eligible, like costs of school, tutoring, expenses for sports or overnight camps, and child support is also not eligible. Within the software, TaxSlayer uses the information from Form 2441 Child Care Credit to complete the WFHDC credit in the Oregon return. And it's always important, but it's especially important because of the lucrative nature of this credit, that the taxpayer obtains all written information and proof of payment and receipts. And the returns that take this credit can experience some delays in processing. The last item we'll discuss in this module is scholarships used for housing expenses. Recall from the training on the federal return that scholarships used for housing expenses can't be taken as a deduction. However, Oregon does allow it. So if there's an academic scholarship awarded to the taxpayer or a dependent, and that scholarship is claimed as income and it isn't deducted through some other means, then we will be able to subtract it on the Oregon section. And we've included this information in this module, even though the mechanism for subtracting it in TaxSlayer is pretty straightforward. Just like the Oregon lottery winnings, it's as simple as choosing from the other subtraction drop-down menu. But as you remember from learning about federal education expenses, these are already complex. So take special care if you see housing expenses and scholarships on the federal return. Let's recap what we've covered in this module. We've stepped through the general workflow from interview to the QR process on the Oregon return. We've taken another quick look at the ASCE worksheet and how a simple item might work in TaxSlayer. And we took a more detailed look at the most complicated subtractions that you are likely to run into, as well as the calculators that will help you finish them at eugeneta.org. And remember, be careful when you're using the screenshots of these calculators and pay attention to any addenda that are covered in the class. At the time of this recording, this is accurate material, but the final version of the calculators could change a little. That's it for today. Thanks for watching, and thank you so much for volunteering. I'll see you during tax season.